Welcome to another video from Trader Stream. Guys, my name is Mohsin. So welcome to another video. Today we will be talking about an intraday trading strategy, which is quite a famous and dependent on a trading indicator which is called Bollinger Bands. So let me tell you how exactly Bollinger Bands came into existence. Well, Bollinger Bands was invented and found out by someone by name John Bollinger in 1980s. So typically he found this trading methodology which would help him analyze the actual lower and upper moving average of any market or any commodity or any stock. So what Bollinger Bands do is Bollinger Bands do help us identify the lower and the upper moving average. So it typically gives us an indication that the market is moving within that specific band. The upper band and the lower band is the actual average, and of course as the market moves in, the averages do change, but it gives us an overall indication that the market is within this particular range. So that's what helps us identify, and that's what Bollinger Band does, and that's what it helps us identify. Now of course Bollinger Band was found out back in 1980. It used to be a very effective trading indicator, but nowadays in today's world of trading, I would suggest to add something more to the existing Bollinger Band if you want to make it an effective trading strategy, because we are living in a high speed era where things go pretty fast in the market and you don't even get time to do any changes, because in 80s it was different the way the trades used to be placed, and today it is quite different. Every minute, every second the prices do change. So let me kind of give you an overview and also a trading strategy which is dependent on the Bollinger Bands. So in this video what I will be talking about is how you can leverage the Bollinger Band and also understand where you should enter or where you should exit based on the Bollinger Band. So this is the Bollinger Band trading strategy that we are talking about in this video. So let me give you a quick overview of what exactly I mean, because most of the people who would be trading on Bollinger Bands, most of the people, they will say if the price is crossing the upper Bollinger Band, you just short it. If the price is if the candle is piercing and moving out of the lower Bollinger Band, you buy it. Now to be very honest, that does not work. I don't know if it used to work once upon a time, but these days it does not work. So you got to make some minor tweaks when you are trading on Bollinger Bands, and it's specifically good for scalping for a short trade of 10 or 5 minutes. So what I would do personally is I will plot a 15 minutes candle. So I would want to trade on Bollinger Bands on 15 minutes. So what I would look at is the price movement on the 15 minutes. So my condition is very simple. What I would really look at is I would combine the Bollinger Band. Along with that, I would also combine our base and explosive candle movement. Now if you don't know how to find out base and explosive candle, we also have a video. I have provided the link to the video in the description box, which will talk about what is base and explosive candle, which is a boring and explosive candle. It will help you understand. So we have combined the strategy of Bollinger Band and base and explosive move. So we will have two indicators plotted on our trading view. First is the Bollinger Band, second is the explosive and the boring candle as well. So what we will look at is, in any of the Bollinger Band, if we find a base and an explosive move which is near the upper Bollinger Band or the lower Bollinger Band, what we will do is we will draw a price. We will enter. If the market comes back to the same price is when we will enter. So we got some example here. So let's say this is the example of NSE. You see there are 3 base candles and there was an explosive move here on the 15 minutes. So what we will do is this price range, we will mark this price range, which is between 12,063 to 12,074. So what we will do is we will short again if the price comes back to the same range. So what happened after some time, the price came back to the same range and it retraced. So these are the type of trades that we would look at, and our stop loss would be above our base candles. So that is the stop loss that we will keep. We will keep a strict stop loss, so you are not trading without any stop loss. I personally also don't trade without any stop loss, because if you are a trader and not trading without a proper stop loss and money management, then of course you are not a trader. So let's look at some more examples. So what we need to look at is the upper Bollinger Band and lower Bollinger Band, and see if we get any opportunity. So if you can actually see, this candle is piercing the lower Bollinger Band, and we saw there is a base candle here and the price has taken a movement from there. So we'll wait for the market to come back to this price again. So market went in here and it came back to this price. If you can actually see here, market did touch the exact price here, this range that we are talking about. It came in here at 11,950 and gave you a price movement of 40 points. Now the rule number 2 here, when you are scalping on 15 minutes on the Nifty, what the points that you will take will be 20 points. So 20 points is what you will take. 20 points would be your ideal take profit, and the stop loss would be your above the or below the candle, or 10 points. So the standard mechanism, it's 1:2. So you will exit all the trades on 20 points, and if you're trading on one lot on futures for 20 points, you will be making about 1,500 rupees or so on. So standard formula, standard mechanism. So that's the opportunity we'll try and look at again. So let's see some more examples and see if we got some more examples. What we will look at here, guys, is the we should see a base candle near the upper or the lower Bollinger Band. So we see there is a base here, but the market, it came almost, you see here, it just retraced the second time the market came in almost close to that, but we would not have got the trade. But if it would have triggered, it would have given us extraordinary result. So let's look at some more examples. We would look at on 15 minutes candle. Okay, so you see here, we see there is an actual movement here. If you can actually see, there is a base and a movement. If you can actually see here, this price range, let me draw a line here. If you can see the line, so this is piercing the upper Bollinger Band, and I see a base candle here and an explosive move. So you should be able to find out the base and the explosive move near the upper or the lower Bollinger Band. So if you can actually see, the price range is 12,107. So what happened? Did the market came in? Yes, it did came in here. It hit again and it gave you the reward. The second time it hit and it gave you the reward. So these are the type of opportunities that we will try and find out. So this is about the Bollinger Band trading strategy that we are talking about. On Nifty specifically and Bank Nifty, we would only trade on the stocks where you have higher liquidity, where the movement of liquidity is very high, so that you can enter and exit trades very fast. So I would suggest to trade only on index, because index would have the higher liquidity where you can enter and exit as fast as possible. So what we did cover on this video is the trading strategy and a profit and loss. It will be 1:2. What we will do is 20 points as take profit and 10 points stop loss. So this is the standard formula that we will follow on this video. So we will be coming up with more trading strategies, and we would also explain about how demand and supply is something which makes the price difference on each and every commodity. So stay tuned for more videos. We'll be talking about more trading strategies, and we'll get you some more trading tips and ideas in our coming videos. So this is Mohsin signing off from Trader Stream. Have a nice day.